Okay, when we talk about child tax credit, this is the first time we'll talk about the special due diligence requirements. We have our normal due diligence requirements, which are that we are preparing the tax return accurately based on reasonable numbers and figures that are being given to us by our client, that they seem reasonable, not suspicious, nothing completely out of line. Uh, we don't have to go and verify everything that's on their return, which is going to be a situation, especially when they're doing like business income. Somebody comes in and they say that they have 40,000 in income and $10,352 in supplies. You say, well, how did you figure that? And they said, well, I added up all our receipts and it came out to 10,352, and that seems reasonable, maybe based on the business, and we don't have to go and add up the receipts behind them to make sure they did it right.
But it's going to allow them to keep a hold of everything they get on.
Yes.
Right, 10 years, right?
7 years is the typical recommendation. So that's your normal due diligence requirements, and we'll talk about that in its own chapter. I think it's 19, but we have heightened due diligence requirements whenever we are claiming the child tax credit or other dependent credit, or claiming the earned income credit, or the American Opportunity Credit, or head of household filing status. These 4 credits, or 5 technically, 1, 2, 3, 4 are credits and 1 is a filing status. These 5 issues on a tax return are most prone to mistakes and abuse compared to everything else on the tax return. So we have a few additional due diligence requirements. Now they're going to throw some scary penalties numbers at you. Failing to abide by these additional due diligence requirements can result in a $600 penalty for each credit per return that you're not abiding by these requirements, and that can apply to both the preparer and their employer.
That's why you better check everything.
Yes, that's why we check everything.
I'm so glad.
That's not the only reason they check.
No, but that's a really good reason.
They also check dyslexic, and I'll look at the numbers on W2, and I'll look at the pad and put it in
Aren't isn't half the population dyslexic, like naturally dyslexic? I know we are till the age of 7 naturally, but aren't there a lot of people that are dyslexic?
I don't know. That's something I'd have to look at.
Yeah, it's not just because of this, it's everything.
Yeah.
Because I guess any mistake, if I were to make like multiple mistakes on someone's tax return, it costs everybody involved money, doesn't it? Even if there aren't penalties from the IRS, there's delays. It's not going to be submitted as quickly. Everybody has to go over it again.
Yeah. So we do review all of the returns that are prepared by our employees. We don't necessarily catch every mistake, but if mistakes do happen and there's a mistake on a return sent to the IRS, it could result in no big deal, or it could be a big deal, depending on the severity of the mistake or how easy it is for the IRS to catch it. One mistake that I'm always paranoid about letting through is not getting enough of a refund, because if we shortchange someone by $1,000, the IRS isn't going to come back and say, "Oh, by the way." And so if we don't catch it, no one's ever going to catch it. No one will ever know, unless the client goes and gets a second opinion somewhere else. If we overstate someone's refund, like we put the wrong number in their withholding, and the IRS catches that, or maybe we skip over a W-2 because they just have a stack of them and we just miss one, that is actually, in my opinion, a less costly mistake, because eventually it'll get sorted out and they'll get the correct refund. It will result in a delay, which is bad for us and will probably refund their tax prep fees. But it's not that critical of a mistake. But our due diligence requirements, $600 for each credit that you claim incorrectly without following the due diligence guidelines. Now, that sounds like a lot, and it actually is a lot, but so far this is my 14th year doing taxes, that penalty has been assessed 0 times against us or our preparers.
Don't stress out about it. When you do the return with the computer, it will pop up with due diligence, and you can pull list all the questions and you just ask you. So I understand.
They will, and even if you are making mistakes, the IRS doesn't go straight to penalties. I've only seen these letters online because I've heard people discussing them, but the IRS starts off by saying, you might want to start being more cautious about your earned income credit claims. And that's your warning. They won't, they won't say, right.
Got it.
Okay. And then these penalties will go up if you are willfully or recklessly breaking the rules, which means you know that someone doesn't qualify, but you do it anyway. Or an unreasonable position is like you want to claim your brother who lives 3 states away as your qualifying child, and we don't follow up on that or anything like that. Okay, so there are 4 additional due diligence requirements when we're talking about these particular credits: earned income credit, child tax credit, other dependent credit, earning, I said earned,
Additional child tax credit.
American Opportunity Credit, and head of household filing status. One of them is that we fill out a checklist that has to be attached to every one of the returns that we prepare that claims any of these benefits. And the checklist is about 15 questions that will almost always be filled out exactly the same way every time.
We can kind of look at stuff for individual self-employment income.
Yeah.
And then there's like a whole other bunch of questions that you got to answer.
Yeah, if we have self-employment income because and earned income credit on the same return, then our due diligence requirements and our risk actually goes way through the roof because not everything on your self-employment tax return, your Schedule C, is going to tie in to anything that the IRS has. The IRS has to rely on people being honest and reporting their correct amount of income and expenses. Our second requirement, besides filling out the 8867, is the knowledge requirement, which says you must interview the taxpayer, ask questions, and document your questions and answers when you're determining whether someone is eligible for one of these benefits. You must review the information to determine that the taxpayer is actually eligible for whatever benefits you're claiming for them. And any information that is reasonably known to you, whether through the interview or even actually known to you through other means, like you just happen to be their neighbor and you know a little bit more about their personal life than a typical taxpayer might, must not be incorrect, inconsistent, or incomplete. So if your neighbor asks you to do their taxes and they say, oh yeah, I want to claim my daughter, and you happen to know their daughter's never around, they're always at their other parents' house, then you can have to say, no, I can't do your taxes. I can't put your daughter on your tax return. Something might be incomplete. Incomplete meaning like someone wants to claim their grandchild as a dependent, and you can't just stop there. You can't just take that at face value. You have to figure out, well, why aren't the parents claiming them? And the answer could be as simple as the mother doesn't work and the father's in jail. And then
We had a situation with you guys that got my first grade. Not the jail, just
also incorrect or incomplete would include a case where someone who is unmarried wants to claim their stepdaughter or stepson as a dependent. They've just put stepdaughter or stepson on their client intake form. Well, they're going to believe that's their stepson or stepdaughter, but they're not married to that child's other parent. So they're using that term in a not technically correct way, even though everybody else uses the language that way. Or they may say their niece or nephew when it's actually their cousin's son or daughter.
Or their friend's kid.
Yeah, or their best friend, yeah. We tend to be trusting of our clientele. But we do occasionally have people that we figure out, or we believe that they're lying to us, and we just say, oh, you got to take your taxes elsewhere. Mm-hmm. Okay. So the knowledge requirement, you have to fill out the Form 8867. You have to submit the Form 8867 with the tax return. And there's the fourth requirement for due diligence is a document retention requirement, which if you're working for us, we will take care of for you. But that just says we have to keep the following records for at least 3 years. The 8867 itself, any computation worksheets that we use to calculate your earned income credit or child tax credit, that'll be produced by the software normally. Copies of any documents that you used and relied on to help determine the correctness of someone's earned income credit, out of household filing status, etc. So basically they're W-2s, because earned income credit, additional child tax credit is going to be based on their earned income. Who did you talk to get that information? Was it the actual taxpayer themselves, or was it just one of the two spouses, or was it their mother who helps them with all of their paperwork, came in and dropped it off, and you asked her questions about your clients?
that would be bad, right?
Not necessarily. You really should, if you're going to talk to a third party about someone's tax return, you should have written permission from the client. But that happens quite frequently where someone will have, like, I've got my son's power of attorney right here. We're just going to do his taxes. And then the record of additional questions. So everything, basically, you're going to keep a complete record for 3 years after the tax return is filed. In fact, we actually keep them for 5 years and not just 3. Let's go ahead and look at what are all the questions on the 8867, and what do you think the IRS is looking for you to say? Did you complete the return based on information for the applicable tax year provided by the taxpayer or reasonably obtained by you?
Yes.
Yes. If credits are claimed on the return, did you complete the applicable worksheets or Schedule 8812?
Yeah.
Yeah. Yes. Yeah. You completing it is the same as the computer doing it for you. Okay. Did you satisfy the knowledge requirement? Did you actually talk to somebody before doing the return? Yeah.
No. When you do returns, sometimes you have drop-offs. People
Yeah.
can drop off the return, you go through and blow it and become signed. Well, last year I missed a couple of them where I would go ahead and do the return and then forget to do the due diligence because they weren't there.
Yeah. So, you actually have to conduct an interview, and the interview could be just as short as, does your son John still live with you? Okay, that's, that's
There's a
the,
child with you all here.
Mhm.
So if they drop it off like that, is that something then that you might want to go through with them before they sign?
Yes.
Yeah.
Okay.
Yeah, so almost always, if someone drops off their tax information, you'll have questions for them. And my own best practice is to write down all the questions I have for them. And then when they come to sign their return, I'll just ask probably only 3 to 5 questions like, does your son still live with you? Did you have any new children? Are you still married? Okay, that's all I need to know. Let's finish your return.
And you don't have to do sticky notes. I found out last year that there's part of the program where you can just go to notes, and when you pull up their name, it'll pop up and say notes.
Yeah, and you can do it either way. If you're more comfortable typing it into the tax return, there's a spot where you can take your notes. If you're more comfortable typing, you can type. If you're more comfortable handwriting, you can handwrite. Probably, we don't have right now where we can record it, but that might also be acceptable. But I also like to. We have a lot of people who will prefer email communication, and for me, that's the best because it's all written out, and then I can just say print to PDF and attach that to the tax return.
Like, you wrote this?
Mhm.
You or not?
Did you review information to determine the taxpayer is eligible for whatever credits you're claiming?
Yes.
Yeah. Did any information provided seem incorrect, incomplete, or inconsistent?
No.
No. But it could be yes. If yes, then did you make reasonable inquiries to resolve the inconsistency, etc.? Yes. And did you document your inquiries?
Yes.
Did you satisfy the record retention requirement? Do you plan to keep all this stuff for 3 years, or do you plan to shred it right away?
Yes.
Keep it, yeah. Did you ask the taxpayer whether they could provide documentation in case of an audit to substantiate their eligibility? Yeah. So that doesn't say that we have to actually have that. We don't actually have to have their birth certificates. But if the IRS asks, do you know how to get their birth certificates? Did you ask the taxpayer if any of these credits were disallowed or reduced in a previous year? Yeah, we'll have to ask that. So that's a question that might be more easily phrased as, have you gotten any nasty letters from the IRS?
Yeah.
If they were reduced or disallowed, then there's an extra form we have to fill out, Form 8862. If the taxpayer is reporting self-employment income, did you ask questions to prepare a complete and correct Schedule C? Yes. And for earned income credit, have you determined that the taxpayer is eligible to claim the earned income credit for the correct number of qualifying children? Mm-hmm. Did you ask the taxpayer if the child lived with them for more than half of the year?
Yes.
And did you explain to the taxpayer that the rules about the tiebreaker rules, if they qualify for more than one person? This one could be not applicable. If they're the only adult in the house, then there's no tiebreaker test involved. But if it's like a brother and sister, and the sister's 3 kids, you might have to explain the tiebreaker rules. Like you're not their father, you're their uncle. You can only claim the kids if your income is higher than the mother's.
I've got like these people who rent next door to me, and there's like 3 sets of parents and a whole pack of feral children. I can't even imagine. Like,
for child tax credit, additional child tax credit, and other dependent credit, have you determined that all the qualifying people are citizens, nationals, or residents of the United States? Yes. Did you explain that you can't claim these credits if the child doesn't live with you?
Yes.
And did you explain the rules about children of divorced and separated parents, including the 8332? Yes. And um, that's important because somebody might say they want to claim my daughter and she doesn't live with me. So it's like, well, where's your 8332? And they might not have ever heard of that form before.
I just have to say, my ex and I, when we divorced, we never filled out that form.
Mhm.
We just agreed he claims one.
Yeah.
And I claim one. 'Cause we had 2 kids.
Yeah.
I don't know if that was legal or not, but they let us do it. So.
Well, even though it's not technically 100% correct, if my clients are in a situation where it's 50-50 custody, where the child lives with each parent half the time, then technically neither parent can claim the child because it has to be more than half. But we can always say it's close enough. We just assign you an extra day for this child and the other parent an extra day for that child.
Yeah, because we just did disillusionment and we do it that way. So.
But if it's anything else like 60-40 custody, or one parent gets them in the summer and the other parent gets them in the school year, where it's clear that one parent has them more than half the year, then we have to have 8332 for the non-custodial parent to claim that child. Unless the divorce or custody agreement was from before 2009. American Opportunity Credit. Did the taxpayer provide substantiation for the credit? Of course, yes.
Yes.
Head of household. Have you determined that the taxpayer was unmarried or considered unmarried in the last day of the tax year and provided more than half the cost of keeping up the home? Yes. And then finally, do you certify that all your answers that you just gave are true, correct, and complete? Yes. So 14 or maybe 12 out of those 15 questions are always the same. But it's just a checklist, just like anything else you might do that has a checklist. If you go through those steps and make sure you've actually done those things. Yeah. So this is, you might actually, especially your first year or two doing taxes, you might actually have this 8867 set aside for you to actually go through the checklist and make sure you're asking all the correct questions that you're supposed to be.